This TradingView indicator is an improved version of the very popular SUPERTREND indicator. In today's video, we will take a look at how to find and how to open up the indicator in TradingView. We will take a look at how to improve the settings of the indicator, and we will of course also take a look at how to use it. So guys, let's not waste any time here. Without further ado, let's jump right into it. So now the first thing we want to do is to open up a clean chart in TradingView. Right now as I'm speaking, I'm looking at gold on the 1 hour time frame. To open up the indicator, we navigate up here to the indicators tab, and what we have to search for here is standardized SUPERTREND oscillator. And we want to go down here and open up the indicator created by QuantiLux. Now the indicator has appeared here on the chart, but currently it's not looking anything like what I showed you guys in the intro. So now what we need to do here is that we need to change the settings. So we go down here to the settings tab of the indicator, and here we have some very important settings to consider. The first setting we have to understand is the Heikin Ashi source, and if we choose this setting, the signals from the indicator will be smoother. This can help us take away many of the false signals the indicator will produce. So what we want to do here is that we want to make sure that we do have this setting checked. Now the next setting we have to understand is the length and the factor, both for the oscillator settings but also for the SUPERTREND of the oscillator. So for the first length and factor, first of all, the length determines the look back period for the main indicator. Or in other words, how many past candlesticks does the indicator use in its calculations. And the standard setting here for the indicator is 10. If we increase the length, the indicator will be a bit slower but will take away some false signals. And if we make the length shorter, we will get faster signals, but at the same time we will get more false signals. So what I usually do here is that I set the length to 14. And you may wonder, why would I choose 14 here? Well, the reason for this is that the SUPERTREND uses the ATR for its calculations. And the standard length for the ATR is 14. And one could argue that this gives us a good balance between fast reactions and valid signals. As for the factor, we can think about this as the distance of the SUPERTREND line from the price. And for this one, I'm actually gonna keep it at 5. As for the next setting, this is the SUPERTREND of the actual oscillator. So this is pretty much a SUPERTREND of a SUPERTREND. And to create harmony between these two indicators, I'm gonna increase the length to 14, just as we did with the oscillator, and I will also actually increase the factor here. Next up, we want to take a look at the oscillator style, and you can see that we can choose here between candles like we have right now. So as you can see, now the indicator turned into lines instead of candles. But what I personally prefer here is to use candles, because the Heikin Ashi candles can give us a bit more detail into the price action. So we get more information from the candles, and that is in general a very good thing. So I'm gonna keep it at candles for this one right here. As for the next settings, we have the SUPERTREND of the oscillator, and this was basically what we decided the settings for earlier. So you want to make sure to have this one checked. You also have the reversion tracer here. The reversion tracer option right here allows us to identify overbought and oversold conditions. And this reversion tracer actually uses RSI to find these conditions. And as you may or may not know, the RSI also uses a length of 14 as the standard setting. So this is yet another reason why I think that 14 for the length here, both for the oscillator and the SUPERTREND, makes a lot of sense here. The last thing we want to make sure here is that for the reversion signals, we want to click both here, so we get oversold and overbought. And for the contrarian signals, we also want to click both here, so we get both buy and sell signals from the indicator. If you want to, you also have tons of settings here on the style tab, which you can use to customize how the indicator looks like. But for now, guys, I think we are finally done with the settings here, and we're ready to go down here and press OK. So now, guys, let's take a look at the most important part here, and that is, of course, how do we actually use the indicator? One of the use cases the creator of this indicator recommends is to use the indicator to trade pullbacks. And while you can use this indicator for many other things as well, I definitely think that this one is one of the best use cases. So let's take a look at how we do this. So the very first step to use this indicator is that we need to identify either an uptrend or a downtrend. And as you guys can see, at this point right here, the indicator flipped from red and bearish to blue and bullish. And what we also want to look out for here is that we want to look out for a longer uptrend. The next thing we're looking out for is that we want the indicator to come down here. We want the indicator to come down and test the lowest part of the indicator. So as you can see, in this case, the indicator came down here towards the blue line, and the bounce right here indicates the end of a potential pullback. So you can see right here we have a pullback. This signal indicates the potential end of this pullback, and in other words, the continuation of the trend towards the upside. But to actually trade using this signal right here, we need to look out for one more thing, and this is something I recommend that you always do no matter what indicator you're using, and that is of course to take a look at the market structure. And what do I mean by this? Well, market structure is, in super simple terms, basically just looking back at how the previous price looked like. And in this particular case, we can actually see something very interesting. You can see that the price struggled with this level right here multiple times. We came up to this level, got rejected once again, right? And we also built up some resistance at this point right here. Then we finally broke above the resistance. But as you can see, during this pullback right here, which the indicator also found, we can see that the price came down here to the previous resistance. So let's actually show this using our rectangle tool here in TradingView. You can see that this is a very clear example of clean looking market structure. Resistance, resistance, resistance. We broke resistance, flipped resistance to become support. So at this point right here, at this exact point right here, we have two things happening at the same time. First of all, we have the signal from the indicator indicating that this pullback might be over, but we have yet another thing supporting our trade, and that is this support level. So this right here is your buy signal, and as for your profit target, as always, you can use market structure for that as well. A common way to take profits is to look at the previous swing high, which is right here, and take at least partial profits at this level. You can, for example, see that this price actually struggled for, a few hours here at the resistance. Perhaps a few traders took profit at this level, and then the trend continued. Alright guys, so to make this indicator even better, it's critical to understand the principles of support and resistance. So if you have some time over today, I highly recommend all of you to watch this video about support and resistance next.